Hi, I'm Greg Brown. I'm professor of finance here at Kenan-Flagler Business School and executive director of the Kenan Institute of Private Enterprise. So I want to spend some time talking about what I think are really important major trends in the venture capital space that have developed over the last few years. Obviously, venture capital has been around for a long time, since really the 1970s. It's become more institutionalized, it's been larger. There was the tech boom and the tech bust around 2000. But really, in the period since the global financial crisis, venture capital has been experiencing growth that's unprecedented. This has happened in a few different ways. It's happened both through the amount of funding that's happened at different stages, early stage and late stage financing, along with development of new markets. So we've really seen an increase in what people call growth capital or expansion capital, but we've also seen huge increases globally. Probably the most significant trend globally has been the emergence of China as a very significant player in the venture capital space. And we've seen the size of venture capital markets in China over the last few years rival the size of the market in the US. So this globalization it's a very tangible, very real phenomenon, but I think it also comes with some concerns. As we've seen companies stay private longer, as we've seen the IPO market be less of a mechanism for exits, one of the things we've noticed is that there's been a shift in the types of governance models that are being applied to venture capital. And in some cases, this has led to some serious concerns and issues. Probably the most prominent case is recently the withdrawal of WeWork from the IPO market and the subsequent realization that there were some very serious governance issues there. So despite the fact that WeWork had grown to have estimated valuation in the tens of billions of dollars, was backed by very sophisticated investors, including SoftBank, there seems to have still been some gaps in terms of how that company was allowed to grow without the really rigorous types of governance procedures that we would expect to see in, say, a public company of that size. So as the venture capital market continues to evolve, as growth capital continues to evolve, as it becomes more global, I think that investors are going to have to keep a closer eye on what is their role in terms of making sure that enforcement of governance procedures is best practices. Obviously, one of the things that's going to be most important to investors is what their returns are. There's been a pretty wide range of returns in global VC, depending on stage of investment and location of investment. So, for example, when we look at early stage investment, what we've seen over the last few years is that there's been really strong returns in Asia and China in particular. The US, North American venture market has been somewhere in the middle, and European markets have actually been the weakest performing. When we look at later stage financing, then the returns are more similar. We see actually quite similar returns between Asia, China in particular, North America, and Europe. So the range of returns in some ways helps explain what's been happening in the capital formation process in these countries. China has this reputation of being extremely hot, maybe even a bubble, and we've seen some pullback the last few years. The US market, people keeping a close eye on valuations because they're quite high, and we've seen a large increase in the number of unicorns or billion-dollar private company valuations. So looking at these valuations tells us something about how investors are going to respond to the markets. And there's a sense that more sophisticated investors are going to have a natural skepticism about what it is that they're investing in and what the price level, whereas less sophisticated investors, and these are people likely to be in earlier stage investments and in markets that are not as developed, they might chase returns and end up in a situation much like the tech bubble that we saw in the US in the late 1990s and the subsequent bursting in 2000. So what does this mean? What should we expect going forward? I think there's a very real risk that there's going to be some unpleasant times ahead for global venture capital investors. We see this, with some of the newer markets around WeWork and growth capital, but I think we're going to see it internationally as well. We've already seen what looks to be a significant pullback in Asia. I think there's concerns of fraying around the edges in terms of what the different exit mechanisms are in more developed countries. And I think that one of the checks in the system historically has been returns that are very low much less than investors expect going into investments, that then cause people to tighten up the parameters under which they invest in companies.